What's going on, vlog? The other day I did a Facebook live video to talk about how I trade and to talk about some basic chart fundamentals. I thought that I would edit that video and share it here on YouTube for easier consumption. Mind you, I am not a financial advisor. I'm only sharing my thoughts for entertainment purposes. I get asked a lot, so I thought I would share. If you like what I do on this channel, give me a thumbs up, give me a subscribe, and if you have any questions, post them down below and I'll get to them in a future episode. For now, let's check out that video and I'll check back in with you guys at the end. Peace. Listen, Bitcoin is going crazy down, but anybody who bought in the last couple of weeks, don't panic. If you guys look back, you can see that there's a lot of history of it going up and down. So I'm going to show you guys the way that I trade. The way that I trade is it's called reactive trading. And reactive trading, see, there's an idea about Bitcoin that Bitcoin isn't going to follow like a typical financial chart, because it isn't a financial chart in an idea. It's actually like a technology adoption, and the technology adoption charts follow what's called an S curve. So if you look at something like, let me see if I can pull it up here for you guys. This is like the rise of technology, and these things don't follow, and that's really what Bitcoin is. Bitcoin's not just like this financial thing. It's a technology. And one of these technologies is going to win out. One of these technologies is going to be adopted by like a bank, like Ripple's like being used by a lot of banks right now. Or it's going to be adopted by the public. And so that technology adoption is going to follow something that looks more like this. So that's the way that a lot of people have been like approaching. I don't know if it's going to do this. This is the thing, this is why I reactive trade. I'm not a predictive person, but if this actually does happen, then the only way you could buy in now and you could always make money. Like if you buy in now and you can make money like 5, 10, 15, 20 years from now, like that's, once it peaks, it kind of peaks. The technology, once it gets there, it's there. But if you look at a financial chart, and like a USD chart versus like a Euro chart, you're going to have like ups and downs, gold valued. Like these all follow like chart fundamentals, which Bitcoin also does follow. Bitcoin, of course, also follows, but the whole idea may be that it may actually be following this parabolic type run right up until it hits a singularity. I don't know if that's going to happen or not. So the way that I trade is this way called reactive trading. What I do is I look at, the chart. If you guys don't know, this website here is called Coinigy. There's a link in the bottom. You can sign up. If you sign up with my link, I get a kickback. I will be honest with you, but appreciate it. It helps out with me like doing things like this and running my YouTube channel. Then you can set up an API. You can set up alerts. There's a few other websites, but they don't allow like the integration with stock charts and then be able to see all the different exchanges here. So a lot of people, what they'll do is they'll do this thing called support and resistance lines. They'll plot out like lines like this and to show like where it had like a tough time passing, but then where it bounced back off. And like you can see, like it did this, like we plotted this line over here, it did it over here, but it bounced over here. So this is kind of like, this is your support line. This is how we could predict that 12,000 to 10,000 was going to be this bounce area, because it was this support and resistance area over here. So you kind of take these ideas, this fundamental idea, and you start applying it to like smaller areas of the chart. You can't, this is the thing, if you're going to look at this chart, you have to do it in 1 hour, and you have to look at least a month. So we've got all the way back to August here. But if we move in to, there we go. We move in, we can see that we can draw, instead of drawing the support and resistance lines, what we're going to do is we're going to draw what's called a baseline. We just call it a baseline because it's just an idea to find an entry, like a base bottom line. So let's check this out. If we move in and we see that, we can see, let's go further back. Let's go back to like September. So say it runs up, you take your profits here. You're wondering, when do I want to re-enter in for its next run up? So we can see that we have a baseline here. We're going to call that a baseline. And that's where it comes down and it bounces off. It comes down and it bounces off. And then all of a sudden it goes below that baseline. And then it goes on its next run up. And then boof, look at that. So it comes down here. Again, we're going to draw this line, this baseline. And we're going to see that it comes down here, it bounces off this baseline, and then boof, we're here. You can buy in, and then you can take your profits here. That's the thing though, is if you're going to do this, you need to be able to take your profits. As you see, as it cracks here, you got to be able to take your profits though. And here's the thing, you can take your profits in multiple different ways. Like, see, if you put in, like, you know, it's about 5,000 here. So if you're putting in like $5,000, or say if you put in like 4,000 here and it climbs up to 5, are you going to take that 5? You could, or you could just take your 4,000 back out, and then you're left with like $1,000 worth of Bitcoin for free. And then the next time it drops down below that baseline, what you want to do is like layer in your buys. You don't want to buy all at once either. So, cause like, who's to say that it's going to not keep on falling, right? So like, how do we create a next baseline? As soon as like this is cracks here and it pops back up, that's the new baseline. So we're going to draw that baseline there, and you can see it's consistent. And then it cracks. But where do we know when to buy? Well, we're going to buy all the way down. So you're going to buy like 5%, 5%, 10%, 10%. Like if it drops down even further, you know, this was sitting at 5,000. So if it drops down below 3,000, that's like a good buy. That's like, you know, over, you know, that's almost, you know, almost 40%, 45% there, that drop. And then boof. You get this as soon as it cracks that baseline. So when do you know to take profits? You can take profits right at that baseline. Like, you know, it's going to bounce back up to that baseline. So why don't you could just take your profits right there. But if you're doing it the way that I said, if you're layering in your buys and taking only the money out that you've put in, you're left with essentially the idea is free Bitcoin. And then that idea of free Bitcoin that you're left with, it's always there for these bigger long runs up. And then as these bigger long runs up happen, you've got this essentially this free Bitcoin that you start selling at these higher profit levels, ready to take when the next. So like this is a big run up, and you can see that it runs up here, and it creates this baseline here, and then it cracks it. And you know, if it cracks it, and it's got this elastic type bounce to it. So that's where you want to take your little entry, and then you take your profits. And then it comes back down here and it creates this big baseline. Look at this. It's that same line actually. Now it goes all the way over here to this other one, but we didn't see it like while you're trading. So like, let's go forward. Let's go forward drawing baselines. So we say we see a bounce here. So we draw that baseline there. We see a bounce here. And you can see that as it goes down, cracks these baselines, it goes right back up. So you could have been buying, and then up. And then what's it do? Let's draw that baseline. We see that it's coming, right? So let's draw it. And now, so we start drawing the baseline, and then it keeps on running up. But let's draw our baseline anyways. We see a couple of bounces here. And then we see a big one. This has been its big run up through the last month here. But we could have... So this is when it starts getting parabolic. This is like when it's pure profit, like $20,000. If you're not taking profits here, you're trading wrong. You have to be taking profit. Like, this is all-time high. If you're buying in here, you're buying stuff for me, the guy that like bought way earlier. So that guy that bought there, what's happening with him is he's buying at 20,000 and nobody else wants to pay like that much for that little Bitcoin right now. So that guy that bought up here at like 20,000, he's like, oh my gosh, it's going to go down. It's going to go down. So what does he do? He sets his price lower than he bought it. And it sees it, like it sees it down here in the volume. It sees that people are losing money. So it shows you like you're like the seller, there's more sellers and there's more people like taking losses than there are profits. And people start seeing that and they start to exit the market as well. And that's when you're ready. You're ready with your profits. You're ready with your profits, ready. We're going to zoom in here and start drawing some baselines on all this stuff. So we could have drawn baselines here because we see there's a couple of nice bounces here. And then you see it cracks here and you could have sold here. It cracks that baseline again and you can go all the way up. We're going to start drawing baselines here too. So if you're doing, like, if you're actively day trading, if you're sitting here, you could like even draw like lines right here and you could like buy here and sell here. If you're sitting there, if like, you know, that you may be thinking like, well, is that even worth my time? Well, if you have 2 or 3 Bitcoin, you know what I mean? Like, why not like buy here, sell there? That's a few thousand dollars if you're sitting with a few Bitcoin, right? And that's how these guys actively day trade. So you could be drawing, as soon as that baseline is set there, you could be drawing another baseline there and it cracks and it bounces back up there too. And then it gets that big long run up and you're holding on to those free Bitcoin for that big long run up, right? So then you see it creates it goes that long run up. It has that little bounce right there. So you draw that baseline. It cracks that baseline and then it pops back up. So that's your new baseline right there. So let's draw a baseline right here. What do you think it's going to do here? Is it going to go down or up? Let's find out, right? Oh, it pops back up. Now it goes down. So you could have bought here. You could take your profits right there. Now look at this big fall. This is what we're looking for. If you're looking, like, this is 20,000. This is a couple days ago. So now we're right now in a bear market. You want to actively trade the bear market? This is where this really gets fun. Because if you see these big falls, these big bounces come back up. And that's what you're looking for. So you're going to buy, if you're buying out on that fall, you're selling right away. You're taking that little bounce of profits. Oh, what happens here? You got a new baseline. You get a new baseline right here. Right? Is that, no, there we go. Come on, let's do this. All right. So you got that new baseline. Oh, look at that huge crack. Huge crack. And now we're getting to where we are now. So you could have been buying, selling, buying, selling, buying, selling. But I think what's going to really happen is you're going to see, because what else happened? All these other baselines that were down here also got cracked on the way down. And then remember, the thing is that we were talking about is that these baselines are actually forms of support and resistance on like a micro scale on these candles, on these I think they're Japanese candles, and the candles show like time indication. Reds are when there's the price drops. Green is when the price increases. So you can see this price action happening. And here we are today. So you could have been buying this entire time. And even if you do fall, like even if it does keep on falling, you've been buying in, waiting for its next run up, or taking, you could, it's 12, you bought it, see, you bought a Bitcoin here, you could be selling right here and make 2,000. And like, that's a good day, right? Like, but this is how there's a lot of other ways that, so let's check out, I don't know if everybody's a member yet, but the Facebook group right here, Crypto Club Canada, we've got some resources in there, and I'm going to show you how the typical, we talked about at the beginning of the video, how the technology chart is adopted, but the typical stock chart looks a little different. And what we're going to look at here is the most important stock charts you'll ever read. So you can see here that the usual flow of the stock market flows like this. And this is why people say, oh, it's crashing, it's crashing. But if you're investing your money, every market reacts kind of like this. But every time it gets higher and higher and higher. You can see it gets higher and higher. So every rally, every cycle. But if you're actively trading, you're going to be wanting to be buying down here and taking your profits here. So as you're looking through other charts, you're hoping to see, like here, you can see this actually happening, this cycle, this rally happen. So this is like, when you hear like it go, Bitcoin dropped prices 30%, you go, well, if that part here happened, I could buy right here, I could sell here, and I could be acquiring right during these drops. I could be acquiring, or I just put in a big entry right here as I go for my next run up. And it's kind of weird that it works like that, but the way that it works is that as these things go, they're testing new buyers, they're testing new seller levels, and then it's coming back down and testing that market again and moving up in these cycles as it hits these peaks. Because this is the way that the market works. You have to understand, like, it's literally just people just sitting there putting in their buy and their sell orders all day long. So when it gets to here, everybody's like, yeah. And then when it gets to here, everybody that starts hearing about it starts buying in and starts pushing it to a level that it shouldn't be at. It doesn't belong to be up here. But like the panic, the FOMO, oh my gosh, I want to get in, this is going to be the next thing, is what pushes it here. And then it bounces back. And then everybody that was bought down here starts taking their profits. And everybody here starts panicking. And everybody starts selling. And then boof. That's when the smart investors start getting back in. The smart investors start getting back in here and taking out here. But if you're following like if there's a Facebook group that has like 500,000 people on it, and all they're doing is talking about like scam coins and like things that like should deserve they don't deserve to be having the runs up they do, but it's pure panic and it's pure FOMO. And you can see that like it's happening with a lot of shit coins right now, that they'll have this like great run up, and all of a sudden they'll panic and they'll sell. Bitcoin, is it going to work like that? Well, I don't know. We talked at the beginning of the video that this could be a technology adoption type chart, which would be a lot different than this type of chart. It will still have these fundamentals, but on a bigger scale. As you zoom out, that will have because you can see how sometimes it's going to be running into this. Let's move out on this chart here. Let's move out to like 1 day. And you can see where we are right now, right? You can see where if we look at the Wall Street cheat sheet, where are we right now? It's about to have that bounce and then come back down, right? It could come down. A lot of people think it's going to just do 10,000 and then come back up and then go for another run up, as this is just the same chart fundamentals applied to a parabolic run up of technology and not finances, like we talked at the beginning of the video. Stuff is important to know because it makes you want, like, you need to know that the difference between your entry point here and it's run up to maybe 40 or 50,000 is only like a double up of your money. But if you're putting in down here at 12,000 and it does a run up to 50,000, that's 4 times your money. And the right entry point is important. Being able to understand this stuff, and this is why we talked about it when, if you were following me on Facebook, you can see, like, look at these prices down here. And I was telling people on Facebook to buy in at 3,000, and on the dip when it happened at 3,000, and then it ran up to 4, and I told people, and it went up to 5, and it dipped back down to 3, and I told everybody. And then what did it do? A huge run up, and then it went back down to around 5, and that's when this huge run up is happening. I'm not telling anybody to buy in here. Like, this is, if you bought in here, you're one of those people that have pushed it to that level. It's okay. You're going to get your money. It's just going to take longer. But this is also why I say that you need to layer in your buys. Is like, we don't know where the bottom of this is. I've taken a position at 12. I want to take one at 10. I would love to, if we get down to 8, I'm going in hard. I'll sell something to go in at 8 or 6,000, like, legitimately, because it's just on sale for when its next run up next year. A lot of people don't realize that this is how this stuff kind of reacts seasonally. And I'll show you how that works. Here we go. And this is I'm gonna give out my shout out to Matt, DJ Thistle out of Vancouver, BC. I think it's Vancouver, at least BC. Big up. So if you look at this chart here, this is Ethereum versus Bitcoin, and you can see Matt here is marked these as the solstice. Believe it or not. So he looks for this entry point around the solstice, and then this profit take place, which happens to be, I think, around March 3rd. And it happened not only once, but it happened twice. And then look at this. This is where we were the other day. And, like, let's see what it looks like now. Let's take a look at what it looks like now. Look at its run up. This guy just predicted it perfectly, right? No, it's seasonal. It's something I don't understand, man. I don't believe in that stuff. I don't believe in the solstice, but it seems to be that you could just put your money in here and wait for around March to start taking your profits out of Ripple and into Bitcoin, and then Bitcoin would enter into its run hopefully shortly after March. And then you can see, like, the profits that you would make, they end up going up exponentially because you're then converting your Bitcoin back into fiat. This chart looks a little different than the Wall Street stock chart, but that's because it's Ether versus Bitcoin, and they both have a US dollar value themselves. So that affects the value, the corresponding values in this chart. So this chart rolls a little differently because of those fundamentals. But you can see that usually runs around the same time. This is just mind-blowing to me. Hey everyone, thanks for watching. Remember, if you like what I do here, click that like and subscribe button, leave a comment down below, hit me up on social media, and I'll see you next time.